Okay, is there any more paper copies of the papers to hand in at all? I have them all, or else you emailed them before class started, right? Okay. All right, we're ready to get started? We got to finish chapter 8 and leave enough time because I put together the subjects to kind of lead your studying into the right area for each chapter. So I hope we have time to go through this because I'm sure you're going to want to know about that. Your final exam, don't forget, is the 20th. That's a week and 2 days away, is that correct? Wow, 9 days. This must be most of your last final.
Yeah.
1:30 in the afternoon, so an hour before the usual time, so keep that in mind. It will be a 2-hour time final, approximately. Did I answer the question? Okay, about a 2-hour time final, and no, I don't have it written yet. So, thanks. I will. I got 9 days, just like you. What else do I want to talk about here? I like that idea too. Autumn's not here, but she ended up in first place in the simulation, which is great news. What's nice about the investment experiment, it ended on a Friday, so the rankings were updated Saturday, because they're always a day behind. And what's nice, because it's a business day behind, the rankings right now are correct. And the totals are correct right there. So if you want one last look at where you ended, it's all correct today. It'll be correct until it updates, I think, tomorrow morning at 6:30 or something. So you should have used these values right here that are on this page as we speak, if you want to make sure you use the right value. If for some reason you forgot a section in your paper, email it to me, and it's just 10% off each day for that part of it that maybe you forgot. I've already talked to a few people who may have forgotten to do the APY for the Dow. If you noticed on Blackboard, the Dow was posted, the ending Dow. So you should have taken the ending Dow minus the beginning Dow, divided by the beginning Dow to get a percentage, and then turn that into an APY. Add it to 1, put it to the exponent of 1 year over however many days. How many days did this end up being?
I got 87.
Most, I hear 87. Do I hear anything else though?
I got 88.
88, 87. So 87, 88 is not going to change your answer much. So I'll be happy with either one of those numbers. But 90 is actually too many, right? Is that true? And is 85 actually too little? So it needs to be around 87 or 88, correct? Okay. Counting the days. And that's calendar days. If you use business days, that's fine too, as long as you use business days for a year in the top of the fraction. So it'd be a year's worth of business days divided by the number of business days. Or 365 divided by the full amount of days, which are probably around 87, 88 days. For the exponent part. Last day for late assignments. If you got a 0 on anything, get it in by midnight tonight. Put it in your own handwriting, take a picture, and email it in before midnight. Or there's an additional 50% off the already 60% off for being late, if it is 60%. What else? Is that it? Don't forget, there's still approximately, actually, your class, 82%, you're in first place out of the 3 classes I have, 77% for this one, and this class is the class I walk from here to there, the management science class, and I have to give them a hard time for being at 68. Wait a minute, maybe a few minutes have gone by. You're at 86, so 2 more people have done it since before class started, and they've gone nowhere. 68. So they're going to be given a hard time. I want to see everybody up over 80, and you've already achieved it, so I thank you very much. I got to get the other 2 classes up over 80%. What else? That's everything. We've got to get done with chapter. Any questions? Let me look at my notes. Deadline for late assignments. Pass back the graded items. We talked about Investopedia. So now we're going to review a little part of chapter 8. I wanted to make sure you get a grasp on actual cash value versus replacement value. We talked about it last week, but I want to review it probably because there's something in your future related to it. How's that? Whatever that means. So, here's an example. Hey, there was a robbery. They couldn't find your money, you had it well hidden, but they took your furniture, because they weren't leaving without anything. Maybe it was your computer, I don't know. Took $3,000 to replace whatever was stolen. It's 2 years old. The insurance company said that they go by estimated life expectancy of 10 years as far as that the stuff that got stolen is concerned. And you have a $500 deductible. If this were a question in your future, it might be, how much will the check be? Because you have an actual cash value policy. So that means they're going to take away depreciation. You take the whole $3,000 and you figure out how much is either the 2 years and then subtract it from the $3,000, or you can do the opposite and find 8 years and that amount minus your deductible. I'm going to take and figure out what 2 years are worth and then subtract it from $3,000. So if it has 10 years, 2 years out of the 10 years need to be subtracted out of here because it's already 2-year-old furniture or whatever was stolen. So I divide this by 10 years to figure out what the depreciation is for 1 year, each year of the 10 years. 3,000 divided by 10 is $300. So 2 years of that has to be subtracted. So $300 times 2 years equals $600. So now I take $3,000 replacement cost for the stuff that got stolen, minus depreciation for 2 years, which is $600, because 10 years was $300 a year, minus the deductible of $500 equals, what is that, $1,900? $1,900 check would be the final calculation if the question we're asking for, how much will the insurance check be because you have actual cash value policy. The key to this is making sure you show that you're calculating depreciation and subtracting it out. Now, I could have just said $300 times 8, and that would have led me to the 22 or 2,400, right? Right, the opposite of the 600, I don't know. 300 times 8 is 2,400, right? 3,000 minus the depreciation is 2,400. Then take the 2,400 and minus 500 and got 1,900. Either way, whether you want to use the 8 years that are still left in life expectancy or the 2 years that is depreciated then subtracted. Either way. But you make sure when you read the question, if it says you have a replacement policy, that's very different. If this is a replacement policy, so this is actual cash value right there, and if it's replacement, there's no depreciation. That's the difference. Everything else is the same, but no depreciation. So this would equal $3,000 to replace it, minus your deductible of $500. This check would be $2,500. There's a significant difference between these two because of that depreciation, and it was only 2 years old. There's a lot of items. I told you about that one house that had a fire, and there was a lot of items that would have reached almost all of its life expectancy, which means it would have been fully depreciated, but because I had that replacement, paying that little extra each year, it was like an extra, I think it was like $50, $40 a year. You can see, in my case, it was a difference between a check for like $11,000 versus $6,000. So you can see how that's one thing you definitely want to go ahead and spend a little extra on, is that getting that replacement. Because once you have a claim, you'll get all that money back for the little bit you had to pay each year. Go ahead, Kaylee, you had a question.
You're always answering my question.
Okay. I'm reading your mind. Any other questions? Does everybody get this? Okay. That's the biggest part of today. Next, renter's insurance. Going to slide 17 if you haven't had this printed off. I'm sure some of you have to be living in an apartment. Are you like me and was renting while you're going to college? You are. And while I was going to college, I didn't have renter's insurance. I didn't even know about it. Are you like me and didn't even know about renter's insurance? If you own a nice I don't know if nice stereos even are a thing anymore, because everything's digital, but if you have a nice computer at home, nice laptop, or something of value, you may want to consider renter's insurance because it's very inexpensive. And if you only have a few things, just get the minimum amount. Even if you get a full renter's insurance policy, it's only about $10 a month. That's it. 100 to 120 for a whole year is all it costs. And if something were to happen, it would be covered that way. You got to realize when the landlord has insurance on the place you're renting, they're only insuring the physical building that you live in, not the stuff that's inside, not your furniture, not your clothes, not your, if you've got a few $100s hidden away, not at the bank, it's not covered unless you have renter's insurance. So that'd be a good reason to have it, especially, you know, if you're hiding money in your apartment instead of taking it to the bank, you want renter's insurance just in case something happens. If someone steals it, you're going to be covered minus your deductible.
So if you have renter's insurance, it covers cash?
Yeah, sure.
That's crazy.
Ask the insurance agent what up to what, but it's probably a limit, but yeah, it covers cash. I've had a cash claim, well, that goes back a long way, in the 1980s, where everything got stolen, including my cash, and it was in the check policy when they covered it. I think it was over here, and then, Monty, go ahead. No, I thought you had a question.
I was just gonna ask, did you have to have a police report?
You have to have a police report. Yes, you gotta call the police first. The insurance company, you can call them 1 or 2 days later, you don't have to call them right away. The police, you do have to call right away. Which leads me to a big part of something I was going to talk about today, which is no-fault insurance. We live in a no-fault state, and that means when you have car insurance, and I'm sure all of you know what I'm talking about because everybody here has probably had a car insurance sometime in their life already. Because we're in a no-fault state, you get in a car accident, it doesn't matter whose fault it is, that person's insurance company takes care of their car, your insurance company takes care of your car, but it does matter whose fault it is in a different way. So I always say, whatever you're going to be late to, and get the police report if you suspect it's not your fault. If you suspect there's more than 50% fault of the other person, do not leave. Get a police report. Because most insurance companies, if you have a police report that shows that someone else is at fault, they'll waive your deductible and your repair will be free, no out-of-pocket money at all. Everybody hear that? That's the advantage of getting the police report. Your insurance company will still be taking care of your car, but they'll take that police report and they'll be going after the other driver's insurance company to get reimbursed for the deductible because they're not going to charge you. Not every insurance company does that, but most do.
I just had that happen to me, and I'm trying to get my deductible back right now because they said like Michigan's like one of the only states where you get the deductible back.
Yeah, now if your insurance company didn't waive it because you didn't have a police report, you can sue yourself to the insurance company of the other driver, but you got to have proof that it was their fault, that more than 50% their fault.
I had all the proof and everything, but they said since like they're not from Michigan and they're like
The insurance
confused by
company
Michigan.
or the other driver?
No, the insurance company. So at first they gave me the money without the deductible included. So I had to like go through it all again.
Really?
And get the deductible, yeah.
Well, that's a good reason to switch insurance companies, because
Yeah.
there's a lot of them out there that will say, oh, you provided us proof right away that it wasn't your fault, we're going to waive your deductible for you.
Something 2 years ago when I first got my car, somebody pulled out and like T-boned me, and that driver didn't have insurance.
Oh, that's the
And
worst.
and my car only has PLPD because my parents
Oh,
were like,
that's-
whatever, you're fine. Like,
Now, you can still sue.
That's what happened, and then my car got fixed from that money that they
Wait. Who did they sue if that person didn't have insurance?
The person.
How did they get the money from the
My
person?
insurance, I don't know. I don't really remember it.
That's the hardest thing. I mean,
But my insurance sued that guy because he was driving without insurance, and it was completely his fault because I was just driving and he.
if you recall, when we were talking about courts, this is a perfect
They went to
situation where
court
you
for
shouldn't
it.
be afraid to go to small claims court and try to get some
That's what
money.
my insurance
And it's
said.
easy to win a case in small claims court, especially if you have some proof that it wasn't your fault and they didn't have
The
insurance.
police report said that he was texting and that like
Oh.
he pulled out and that.
But the hardest thing is, after you win, is getting the money. That's the hardest part.
Yeah.
Your insurance company took care of your car because we're in a no-fault state,
Yeah,
but did they charge you your deductible?
I honestly don't know.
Oh, you don't remember? if you had a police report right away, they probably didn't charge you deductible, but they're the ones who probably had to go after that person because that person didn't have insurance. Oh, wait a minute, you didn't have collision, so.
No.
Yeah, so
But
your
the
insurance
money-
company didn't cover your car. You had to
But the
do the
money-
suit yourself.
Yeah, and then that money from him fixed my car.
How you got the money from them is unbelievable. I have
That's
not
my
heard a
mom's
story in a
side.
long time where an individual got sued in small claims and you were able to get your hands
It's
on the
from
money.
Wyoming.
Well, that's even worse.
Yeah.
It's so hard to get money from someone who lives in another
And he
state. They were,
left before, like, he had to come back to the court. It was a whole, like.
if he thought he
He
could
went
win,
home,
see, there would be no reason
he
for him to
came
come
back.
back if he knew he was gonna lose.
Yeah.
And then it would be, okay, try to get the money now. You'd have to know where he works, you would have to then
His
get it.
mom apparently lived in Davison, where I
Oh.
live. So,
Oh,
like,
that
he
was-
had to come back, and she made him come back.
Oh, that was lucky.
Yeah.
You very
It was a
rarely
whole
hear a
thing.
story like that. When someone doesn't have insurance at all, that usually means they have no money to get when you sue them.
Pretty sure his mom paid it, but I think it's okay. I mean, I don't.
That was a happy ending, that's rare, just so you
Yeah.
know. But anyway, get a police report, period. That's the point I'm trying to make. Do not let anybody talk you into, oh, I'm gonna, especially if the other driver goes, oh, please don't get the police involved, I will pay you. This is a very common thing. I will take care of it, please don't call him, don't call him. Do not be a sucker. Do not be naive. You get the police report, even if you have to get them to stop bugging you, say, okay, go ahead and take off, or whatever, then call the police and don't leave. You know, whatever you gotta do, get the police report if it's not your fault. The deductible alone's worth it. Because even if you have the lowest deductible, I guess that's zero, but there's 100, there's 250, and I'm trying to talk you into raising your deductibles, especially as you get a little older and more responsible, because you'll come out way ahead by raising your deductible by having lower insurance premiums. Go ahead, kid.
Yeah, I actually just got in a car accident like last week, and then,
Did you get a police report?
yeah.
You
yeah,
did?
called
That's
the
great.
police. I wasn't found at fault, so. like,
What was the other person found at fault?
Yeah,
Oh,
um,
good to go.
it was weird, the person behind me hit the front of my car, like,
What?
Yeah.
The person behind you hit the front of your car.
yeah.
There's more to that story.
Yeah, I was like stopped, and I was turning, and they didn't see that I was stopped, and they went to swerve, so they didn't like hit the butt of my car.
Oh.
They swerved and hit the front of my car while I was turning.
This is that car that's really expensive.
Yeah.
Yeah.
So.
So you haven't had it repaired yet, but it's drivable.
Yeah, no, I actually have my car back already.
Oh, okay. Was it drivable after the accident?
No.
Oh, that's why you got it fixed fast.
Yeah.
And have you had to pay the deductible?
No, because they said that, because the police report didn't say who was at fault,
Oh.
so my insurance had to come out and decide themselves. And they said that I wasn't, but had I been, I would have had a $600 deductible, and they like waived it, and I didn't have to pay anything for my car.
Great, perfect example. I'm surprised the police report didn't determine fault, but to have an insurance company go ahead and determine it themselves, that's a great story. I have not heard that story from anyone else yet, so that's a good one. Because usually insurance companies do anything they can to not pay, your deductible for you. So that's a good story. They probably said, oh, look how much she's paying in insurance, we better take care of her. We're already overcharging her. If I remember the story. So there's the no fault I want to talk about as far as insurance is concerned. I'm going to slide 25 because I want to talk about, you may notice on your car insurance, part of it has medical. And I want to make sure you realize that a lot of people get car insurance and they're going, wow, this medical part, look how much I'm paying. And then something changes in your life and you end up getting health insurance from an employer or whatever the situation is. Whenever you called and got a quote for your car insurance, if you didn't have health insurance at the time, the medical portion on your car insurance is much more expensive than had you been able to provide proof that you already have health insurance through an employer. As soon as you get health insurance, you want to get a hold of your auto insurance company and provide the proof, look, I have health insurance now. They will change your policy because the medical portion on car insurance works side by side with a health insurance for the individual, where the health insurance pays first for any injuries, then the medical insurance from your car insurance does. So the odds of them having to pay a lot are very much lower if you have health insurance, so they reduce your premium significantly. So I just want to make sure if anybody got health insurance after they already got their car insurance, you may want to contact your car insurance company and provide the proof that you now have health insurance and watch your car insurance go down in price. And they may even owe you a refund. So that's the part I want to talk about, medical payment coverage for your health insurance, or for your auto insurance. Next, driver classification. We're going to slide 33. This is one of the very few things in the world that you could be discriminated against for your age and your gender. It's shocking, actually. There's very few things in this world that you can be discriminated against for those things, except for car insurance. For some reason, car insurance companies are allowed to have a different rate if you're a male versus a female. A different rate if you're over 50 or younger than 25 or older than 25. And then again at 45 or 50, different rate. So, I mean, you can imagine if you're under 25 compared to over 25, which one gets a lower rate? Yeah, over. You know, they say that most people get in their first accident in the first 4 to 5 years from the time they start driving. And I know that was true for me. Is that true for anyone else who got in their first accident within the first 4 to 5 years? So not even half of you, which is shocking, because the statistic's usually pretty good. And then after that, as you get older, you get wiser, you become a little more conservative, and when you reach 50 and above, you drive less miles, you're not have to go out all the time, blah, blah, blah. And that's true, you just don't have the energy anymore. So other things that, big part of it is right here, your credit history. So another reason to start building your credit up, when every time you get a quote, they check your credit, but it doesn't affect your score because it's called a soft check. Do you remember the difference between a hard check and soft check? Anybody go shopping recently? I know Target does it all the time, Sears, I can't think of some other ones, where you're just about to check out and they say, would you like another 10% off everything you're buying today by applying for our credit card? Did anybody get hit with that? Yeah, it should be, because a lot of you are shopping right now. If you go forward with that, they do a hard check. And that hard check is on your credit report, and it does have a small effect on your score. If you have like 4, 5, 6 hard checks over a short period of time, it has a significant effect on your score. Just 1 or 2, not a big deal. But shopping around for insurance, don't be afraid of them checking your credit history, because it's a soft check, which means it doesn't affect your credit score, but it does affect your rate. Go ahead.
I know some retailers do soft checks. I used to work retail, and ours was a soft check at Old Navy.
Really? That's shocking. I don't know how they're able to do it.
Because people would ask us all the time, and you could look it up, and it was.
There's a small chance that that could be not necessarily true, because I'm not sure how most retailers, I audited a bunch, have contracts with the credit agencies where it doesn't matter how many they do, they just pay a monthly fee for however many they need to do, because they know they're going to be offering this credit card thing or something like that. So I'd be really shocked. I'd like to know how they did it, because that should be passed on to all retailers, how they can do a soft check compared to a hard check.
I used to work for a company that we did a soft check.
Because what is it you were selling to the consumer?
It was,
Or you're authorizing them to avoid
it
it?
was ABC warehouse. If you got denied from ABC's credit card, then it came over to us, there's no credit needed. But if you got approved, then we did report to all the credit bureaus.
Okay, but when you say no credit needed, but
Yeah,
that's
it
what
was a soft
allowed you to be able to do a soft check, because
Yeah.
you weren't checking to approve them for credit necessarily, or?
Just to make sure if they had like an outstanding like BTE bill or a previous like skip stolen or anything, then they.
So another retailer, so I'm thinking that the only way I guess these retailers are able to do a soft check is if they're saying, we don't want the score. We just want the information maybe, looking for something other than the score
And we
possibly.
didn't get the score. They didn't get the score. It was literally they just inputted their information. You get an approved or denied screen.
Approve or denied only, same?
Same way.
You didn't get the detail then?
Right on the spot.
Okay. Yeah, I don't know how, I'd like to learn more about how you're able to. There's one more question over here. Go ahead.
If you're applying for like an apartment and they do a credit check, is that?
That's usually a soft check. That's usually a soft check. They're trying to decide, how much risk you are to approve you for the apartment. This place on house sitting, I couldn't take it anymore without the internet, and they did a soft check to determine whether I needed to put a deposit down for the internet or not. Anybody know what I'm talking about? I guess if your credit check, soft check didn't turn out that well, you would have had to put a deposit down for that first month payment or something. Is that true? I don't know. That's what they said. And that was a soft check.
No, I'm saying what you're talking about.
Same thing? Yeah, and that was a soft check. So I was kind of surprised that they do that. But I didn't know they'd take deposits.
So are you saying that if you are at TJ Maxx and do you want to sign up for the credit card and you say yes, they look at your credit score?
They do, well, like
And
she
then-
said, they're gonna
and
get
then it
approved or
takes
not
points away?
approved, but on your credit report, it will say, it will give the date and that a hard check was done, and there's a small part of your score is based on if you have too many hard checks over a short period of time. And the hard check stays on your report, I'm almost sure for 2 years, for 1 year for sure, but maybe even 2 years. And then when they come back off 2 years later, all of a sudden, if you have Credit Karma, you'll get this notification. A hard check has been removed from your credit report, and your score goes up a little because it got taken back off. The reason I've been told by the credit agencies as to why hard checks affect your score is because when they see someone having 5 hard checks really fast, that means that they're applying for a lot of loans, and the credit agency kind of looks at that as a red flag that they think there's a small chance. There's people out there who'll say, I had enough. I'm gonna rip everybody off. I'm gonna claim bankruptcy, but I'm first gonna try to put as much stuff on credit as I can, and they'll start applying for all this credit. And so the credit agencies are saying, wait a minute, there's something going on here. This person just applied for 5 different credits over 1 month, and that's why it kind of gives a red flag and has a significant change in your score. That's what hard checks do. I also noticed some mortgage companies, this is what you got to watch for. They for sure do a hard check when you're trying to get a loan to buy a house. If it takes a long time to get to closing, like remember how the assignment said no short sales? When you go to make an offer on a short sale, that price you saw advertised is not the price that is really what the house could be sold for. In most cases, the bank who said, yes, we're allowing that owner to sell the house for less than what's owed on it, but they advertised it much lower than what we're willing to accept. And the amount of time before you finally hear from the bank that they're not even going to accept your offer or they will accept your offer is so long that the mortgage company will do a second hard check before closing just to make sure there isn't any significant change in your score. So you'll have 2 hard checks from the same loan company because of how long it took to get to closing. So that happens. Any other questions? Is that it? Has anybody said, hey, I've been in this class now for 14 weeks, I'm going to go ahead and take to heart and get a credit card and use it for my gas, maybe pay my cell phone bill, and start moving my credit score up?
Well,
Just 4 or 5 of you? 6, 7? Good. You haven't seen a change in your score yet, probably.
Well, I was gonna get one because of that.
Oh.
And so I was applying at U of M Credit Union for it, and while I was there, I figured I might as well text one of my parents just to let them know that I'm doing this.
Yeah.
And I got like 14 missed calls as soon as I walked out. I was like, oh boy. So then I called them back and I was like, yeah.
Call from a parent?
Yeah, I was like, yeah, they're like, did you do it? And I'm like, yeah, they're like, okay, cool, could you buy this for me?
No. Then you gave the whole speech about what you got it for, and it wasn't to buy anybody anything. Huh?
I said, it's just for gas, I can't buy you anything.
Oh, good. All right. And don't ever co-sign for
And
anything.
they said, I was just testing.
No way.
Yeah, I
That's
said,
funny.
okay, because I wanted to buy a laptop really bad, and they needed something too. So they're just seeing if I'd actually.
Did you end up buying a laptop on a credit card?
No,
Oh,
just for
okay.
gas.
Okay, good.
But I
Because
wanna buy-
remember, the theory is that you're always going to pay that credit card off in full, unless it's a 0%, but still, you're going to pay it off in full and have that discipline to always have the money that you're about to spend set aside to pay it off in full to watch that score go up. If you've been at it now, the most you've been at it is a little over 2 months, so nobody's really seen a real effect on their credit score yet. But when you get to 4 months or 5 months, you should see a significant increase in your score if you're doing exactly what we talked about. Go ahead, Elizabeth.
Some credit cards, like Chase, I just got a Chase credit card, and if you spend a certain amount of money
Yeah.
on the first, they give you money back.
It's about,
because-
if you use it for about $500 in 3 months is about the going amount, and they're offering you $100,
I think $100 back. and
all of a
so-
sudden, 90 days go by, they see that you did it, and $90 credit or $100 credit will show up on your credit statement. You'll go, wow, this is great. It's a free $100. It's a great incentive. If you're paying that credit card off in full, it'll just it's not costing you anything. It's $100 free money.
Yeah. And so, like, I guess just look out for that, because I didn't even know about it. They told me about it when I applied for it, so.
Yeah, that's a good incentive. You picked a good card to do it with. Just make sure and pay it off in full, and it won't cost you anything. And you're going to say, oh, I'm about to get this $100. Should I pay this off in full? Yes, pay it off in full. Let the $100 get applied. You now owe $100 less on the next round that you're charging things. So, yes.
Best Buy has like a really good credit card deal, so if you're gonna I bought a MacBook and they give you 18 months to pay it off. As long as you're not late 1 month, you only get charged interest. The interest start after the 18 months.
So it's like 18 months, 0%. She's directing this to Raul, who's not listening to you.
I know I heard.
Oh, okay. It's 18 months, 0%, as long as you pay the minimum each month,
Which is
and then you pay it off in full before the 18 months are done, and it didn't cost you anything. Right. Which is, a lot of the 0% cards, it's the same thing. As a matter of fact, odds are Best Buy really subcontracts a credit card company. It probably looks like a Best Buy credit card, but if you read the fine print, it could be Citibank or Chase. A lot.
went through my credit score and
It didn't go up?
it did though.
It did go up, because you've been making the minimum payment on this Best Buy card, is that what? Oh, good. But at the same time, make sure and save enough to pay it off in full by the time you get to the 18 months. Okay, good. All right. So we all know what our rate on car insurance and any insurance really could be based on. Our age, our gender, marital status. They say people who are single get more accidents than people married because they're more responsible. I guess. That's what they say. Credit history, driving record's a big deal. That's pretty obvious though, right? So, and driving habits. And if you have a claim, like she put a claim in her car insurance for the accident you were in last week or 2 weeks ago, and what Kaylee might expect, because it wasn't your fault, I'm not sure that it will happen, but a lot of insurance companies will say, okay, when it's time to renew your insurance, you may see a little higher increase than normal because they're trying to get some of that money back. That's when you make sure and shop around and call all the other insurance companies. I know your grandmother's involved and she wants it to be on hers, but shop it around for her too. You could probably save her money if she wants that multi-discount. Just shop both policies around, even though hers isn't due yet, okay? Because they probably will try to do something with it.
My insurance went up after the accident.
Yeah, well, they don't let you know until it's time to renew it, which is usually only a few months after the accident. And then you go, wow, you know. And if you don't look at what your price was 6 months ago, or if you're on monthly, I guess you don't notice it, but if you don't, you know, you got to pull out 6 months ago's policy because they don't put it on there. Here's what it was before, because they don't want you to notice a 10% increase when inflation's only at 2%. This is where they get their money back, is trying to make sure that people automatically renew. Hey, we're going to increase it a little more. They're going to automatically renew. We'll get our money back. You know, and that's kind of their trick. So, all right, we're to one of my favorites. I don't even have a slide for it, but it's life insurance. So I don't even know what to show you. Probably none of you have life insurance unless you have children. You know, if you're not married, or you probably don't have life insurance. If you don't have children, you probably don't have life insurance. But most of you will get to a point in your life where you will be considering life insurance and probably will get life insurance if it's not being provided by your employer. And there's a lot of employers who will provide a little bit of life insurance. When it's time, if you are ever going to buy your own life insurance, I want to make sure you realize there's these two terms. One's called whole life. They have changed the name of whole life to try to, because whole life started to get this reputation as to, who wants whole life? Wait a minute. Sometimes it's called, now there's a version of it called universal life. And now there's a version of it called variable life. These are all names describing whole life. And let me make sure you understand what it means. It means you're not just buying insurance, but you're paying for an investment with the insurance. And this investment is usually very similar to a mutual fund, except for the fact that it has a whole bunch of fees involved and you don't realize. That's the difference. And that you would be much better off not going with the insurance that also you're paying for an investment, and in taking that money and investing yourself through a no-load mutual fund that doesn't have any of those fees, and you'd come out way ahead. So my advice is try to never, ever buy whole, universal, variable, I can't think of all the other names, insurance, life insurance. To try to avoid it because you don't want that investment portion of it, and that if you want the investment portion of it, figure out which part of your monthly fee would be for the insurance and what part would be the investment. Switch to a different kind of insurance where you go for just the insurance and take the money and invest it yourself, because you'll avoid a whole bunch of fees that are hidden when it comes to life insurance. Term is the one you want to find. This is life insurance policies that are for the insurance only, not the investment that goes along with it. Much less expensive because you're only buying life insurance. Now, the life insurance is for a period of time. Hey, I would like this life insurance policy for the next 30 years. And if you live 30 years beyond when you finally got this policy, you will have to renew it. And you know, and that's the difference. Whereas a lot of times with whole life, because you did the investment, it's usually a life plan that's there for the rest of your life, but you're making the payments for the rest of your life. And you can have term insurance for the rest of your life. You just got to remember to renew it. And believe me, they'll send you notices. But, for example, term life insurance policy might be about, I'm just throwing a number out there, $30 a month. The same policy, but it's whole life or universal life, and it includes an investment, will be more like $120 a month or $100 a month. $30 of it's going to the insurance, the other 70 or 80 or 90 is going to this investment that has all these hidden fees. And then they'll give you this whole thing, oh, but this money builds, it has a cash value, you can take it out anytime. And you can also take that money, go with term life, take that 70 or 80 extra dollars, invest it yourself into a mutual fund, no-low mutual fund, and you can take it out anytime, and it will build. And if you go ahead and tag it as Roth IRA, all the money it makes is tax-free. Roth IRA is the best thing out there other than buying a house where you can get tax-free income. So you know how I always say, never, ever, ever co-sign. Never, ever, ever buy whole life, buy term life insurance if you're ever come to a point ready to buy insurance. Go ahead, Drew.
I was gonna say, when you have whole life, the savings plan, when you die, that it does, you don't get that money. You just get the insurance payoff.
Just the insurance only, and not
They
all that
keep,
money you put into it.
cash value, yeah.
With whole life, though, the payoff when someone dies is a little more
Yeah.
than with the term life because you've made that investment part of it. But yeah,
Still.
there's all kinds of little rules that almost everybody I talk to regrets that they went with whole life, universal life, whatever the term is, variable life. Go ahead, Kaylee.
I actually do have life insurance, just because, like, even at my age, like, no children or anything like that, just because, when my grandfather died, they were, like, his and my grandma's, life insurance, like, they called, like, 6 months before my grandpa died, and my grandma asked for a verbal, like, confirmation of what they had, and they told my grandma something different than what she had over the phone. So after my grandfather died, my grandma thought she was gonna get, $50,000 for, like, him dying, and it ended up being that, no, they only had accidental insurance.
Oh, wow.
So, like, we had to go through and, like, figure things out. Then after that, my grandma was like, well, I'm not going through this insurance, so then fees started going down. We got, like,
But what's the reasoning for you having life insurance? What was the logic behind it? Just to have money to pay for a funeral if something were to happen?
yeah, because it was something like, my grandpa wasn't sick.
Really? Because I always feel like I'll be dead, I don't care about my funeral. You know, I just kind of, you know.
That's so true, though.
Yeah.
What?
That's so true, though.
That is, I mean, I'm dead, I'm not gonna be there. You know, and
My parents are like, you know, we're gonna leave you. I was like, wow, they're like bills.
yeah, bills. Yes, that is true, you will know. Bills. So, are we ready? How much time we got? We got some time. You ready for this? Are you ready for this? So we're done with chapter 8. No homework, but I will put up some problem answers to use for studying, and hopefully you notice chapter 7 problems have already been, some problem answers to use for studying have already been posted, I think. Is that correct? Anybody know? Nobody's checked? All right. Whoops, that's the wrong list. Here we go. Get your phones out and take pictures instead of writing your butt off, because I got 2 sides to this. Can you see it? Should I turn the light on it? Is that better? Okay, these are the areas to study. Chapter 1, Chapter 6. I've got them in order from when we covered them. Let me get out of the way here with all these phones up in here. So I need to talk about it. Time value, money, you know what that is. Present value, future value, lump sum, annuity. You know that's going to be there, right? We've had that all semester on every quiz. There was something about future value, present value. What else? A rule of 72, refresh your memory. Now, I'm not saying if it's not on this list, it won't be covered. They're just for sure, if it's not on this list, there won't be a problem. There may be a true and false, or maybe a multiple choice, but there won't be a problem. As far as problems, where you have to do calculations, I'm going to stick to this list for the final.
We haven't written it yet.
Finals is 20.
But I haven't written it yet, but I'll have this list in front of me when I'm writing it. What? It's 9 days from today, a week from Wednesday. Chapter, let's see, credit card disclosure. Yes, of course. We talked. That was one thing I've drilled on all semester long because it's so important that you build your credit card score up to get prepared for the future. And that's why I went through a whole bunch of credit card disclosures, so you can quickly when you start getting them in the mail all the time, you can quickly look at it and throw it away. And you're looking at, hey, is there a fee to do a balance transfer? Is there a fee to do a cash advance? Is it 0% if I start using the card? I think there's 1,000, but I'm not positive. Just quiz. I have no idea. Your usual quiz is what, 3 pages, would you say?
Yeah.
Okay, so 6 pages, because it will be 2 hours compared to 1 hour. Well, there's no really negotiating, but I'll consider it. Depends. Yeah, okay. Let's see, Chapter 6, buying versus leasing on a car. That's one of the most important parts of that chapter. And I said if you practice a certain way of buying cars, never buying a new car, and take that assignment to heart, buying should always be better than leasing when you get down to the numbers. Because you're making low-ball offers on the car, just like we did on the assignment we talked about. And that calculation that we went through, buying versus leasing. And don't forget, on that calculation, and even when it comes to home buying versus renting, I said take opportunity cost out of the calculation. Does everybody remember that? So on the final, I don't expect you to do the opportunity cost, whether we're doing car buying versus leasing or home buying versus renting. The opportunity cost on those examples you can take out of there from the book, and don't expect to have to do that part. Small claims court, franchise fee, break even. Remember that, how the franchise fee is going to cost this month, you have to sell, how much do you have to sell to get back in commissions to pay for the franchise fee, that whole little calculation. Buying club memberships, break even is the same as that franchise fee. Chapter 2, net worth calculation. Being able to look at a balance sheet and recognizing what are assets, what are liabilities, how to calculate the net worth off the balance sheet. Liquidity ratio, savings ratio, debt payments ratio. The other 2 were already on the quiz, so these 3 were not quizzed about, so they could be on the final. And emergency fund, both in chapter 2 and 11, the descriptions about the emergency fund. Like how many months is the emergency fund supposed to be? I don't remember what we said. Chapter 11. Employer retirement programs was one of the most important parts of that chapter because everybody in here, if there's a matching, you must take advantage of it. You must make sure you're getting that matching and not lose out on that instant money. Pyramid of risk, that was an important part. What kind of investments are low risk compared to investments that are high risk? Diversification, my favorite part of investing that I wanted to make sure you understand. Spreading the risk among many investments so that you can lower the risk you're taking and still go after the higher return. Bond value appreciation. Which way do future interest rates have to go if you own a bond for it to be worth more down the road? Which way? Interest rates going up or down?
Down.
If interest rates are going to go down, your bond's going to be worth more money. So if you get a time in our economy where you feel so sure interest rates are going to be going down, then you want to possibly get into a bond mutual fund in your retirement program because that one will do much better than the other ones. Where was I here? Bond, corporate bond value appreciation, callable bonds, read about it, corporate bonds, municipal bonds, treasury bonds. Chapter 13, mutual funds. We didn't get quizzed about expense ratio, but that's an important thing to recognize. Does anybody remember I said I always wanted to make sure I never got into a mutual fund that had an expense ratio over what? Not all at once. We are recording. No. 1%. 1% or less, because I felt if an expense ratio is more than 1%, that those managers are wasting money. Remember that? And that's less money for the investors. So expense ratio is on there. Family of funds, what that means. Total percent return, how much you made divided by the original investment, blah, blah, blah. Deferred sales load. We did front-end loads on the quiz, which is a loaded fund, front-end load, but we didn't do the deferred sales load when you're, that kind of fee you gotta pay when you're selling your mutual fund, if you have a fee. Index funds and fund names. Being familiar, if a fund has the word equity in it, what does it mean? If it has income fund in the name, what does that mean? Being able to recognize those common names. Chapter 12 are stocks, total return amount, earnings per share, book value, margin selling. This was the answer on that quiz for, I can't remember which question it was. I know this wasn't the right answer. I can't remember what the question was, but a lot of you. So you must have looked at what margin selling is somewhere. I know I lectured on it, but I mean somewhere during that quiz, because a lot of you thought that was what I was asking for. Using limit trading on Investopedia. Remember what that means. You could set the price, and then either it's on the way down, if it hits it, it will sell for you. If it's on the way up, if it hits it, it will buy the stock for you. Using limits and what that means. Chapter 3, taxes. I think this is the one most of you kind of didn't like the most, possibly. The 1040 form and the itemized deduction form. Tax deductions versus tax credits, one of the most important parts of that chapter. Tax exemptions, tax audit, strategies to lower taxes. Remember I said you're not going to cheat and avoid taxes. You want to just lower, you want to make sure you know all the rules so you can pay the least amount of tax legally that you have to pay. The other chapters, here's the phones again. This is a new page. Get them out. Here we go. Chapter 4, ATM fees, NCUA insurance. FDIC was on the quiz. There was a question, but not the NCUA insurance part, which is almost just like FDIC. That's the credit union insurance per depositor. Certificate of deposit, which are CDs. Just be familiar. Quick question, just to kind of help you. You're looking at 2 CDs. One is a 1-year maturity, one's a 5-year maturity. Which one should you expect a higher rate of return being offered by the CD? The 5-year. The longer the time that you're committing the money, the higher the rate you should be expecting in return for committing the money so long. Very good. We got that recorded too. All right, I don't know what that means other than participation. Compared to, what's this, inflation? Inflation compared to your rate of return on an investment. That's all that is. I talked about briefly in the lecture. Chapter 5, debt to equity ratio, for sure. Where's the other one? Debt to, oh, you were already quizzed on it, I think. Debt to equity ratio, you may have been quizzed on that also. Open-end credit, credit bureaus, credit disadvantages. The biggest one, the temptation to spend money you don't have. That's the biggest one of disadvantage. That's why it's a big deal. 5 C's of credit, we talked about, but it wasn't on a quiz though. Credit dispute, I know we talked about that. Stolen identity, co-signing a loan. Give me one word.
No.
Ever. Never, ever. That's 2 words, but no is perfect. Bankruptcy. Chapter 7. Chapter 8. About 35 to 40% of your final is over these 2 chapters because these were the last 2 we covered since quiz 4. So most of your final is chapter 7, chapter 8, and they're fair game, the whole chapters, both of them. Think about chapter 7 in housing. Affordability calculation, how much you could afford to make an offer on, that was a big part, and I kind of said, hey, you should expect this on your final. I still hold to that. Renting versus buying a house, that was a big part of chapter 7, and I said to you, that will most likely be on your final. Yes, that will be on your final. I haven't written it, but I know that will be on there, because those are the 2 most important calculations from that chapter. What should always win when you calculate renting versus buying a home? Buying because of one word?
Appreciation.
Yeah, because you did what to get the appreciation?
Picked a good location.
Location. Location, location, location. That's 3 words, but I just needed it once. Location. That's the key to buying a house. Always beating renting. Always. It's all about location. You got to do your research. Chapter 8, insurances. We just finished it. I don't know why anybody's getting their coat on. We have to do it in class. What? Our last in class, we traded it for one less homework, if we recall. Thank you. I got one person backing me here on that. I got a lot of looks like I'm crazy. All right? Everybody good? We're ready? there any questions before we start our in-class and have chaos all around us? Great again, oh, you had a question about the final.
I did. 5 pages, right?
Yeah, 6 or so pages. Okay, our last in-class assignment related to Chapter 8. Whoops, hang on a minute. What amount would a person with actual cash value policy coverage receive for a 2-year-old furniture destroyed by a fire? The furniture would cost $3,500 to replace today and had an estimated life of 7 years. This policy has a $250 deductible. Show your work. That's the most important part of this in-class assignment because it's probably going to be detailed graded. I have 9 days to get it back to you. I'm going to fit in a detailed grading. Show your work. The most important work I'm looking for is your calculation of that depreciation.